In this video, you'll learn 7 assets that will make you rich when the dollar collapses. So, let's begin. As various nations reduce their reliance on the US dollar, investors are getting concerned about its stability. Although many experts argue that a decline in the dollar is unlikely due to its status as the world's primary reserve currency, findings from the American Enterprise Institute show that the dollar has lost 96% of its value since 1913. This is an indicator that even the most dominant currencies can experience significant shifts over time. While the future of the US dollar remains uncertain, you need to be prepared for any outcome. Fortunately, in this video, we'll explore potential assets to consider during a dollar downturn. Asset number 7, gold, silver, and other precious metals. Throughout history, gold and silver have stood out as trusted assets. Their intrinsic value and the fact that they've served as money for countless generations make them especially appealing during economic or political turmoil. Unlike paper currencies, which are susceptible to government monetary policies and can be printed in large quantities, the supply of these metals is limited. This scarcity essentially guards them against rapid devaluation. Thus, when economies face inflation or political instability, investors tend to flock to gold, viewing it as a more stable asset that can safeguard their wealth. Investing in gold and silver isn't a guaranteed win for everyone. Though these assets offer stability, they lack the dynamic potential of some other assets. Unlike stocks or bonds, precious metals don't yield regular returns in the form of dividends or interest. This can be a limitation, especially when interest rates rise and other assets offer better returns. For those considering acquiring precious metals, 2 main options exist. You could opt for the traditional route of buying physical metals such as gold coins or bullion, but this has become less popular due to concerns about storage and security. An increasingly favored alternative is the Gold IRA, a retirement account tailored for gold investments. Instead of storing bars or coins at home, investors can have tangible assets in a secured environment or opt for related securities. While gold and silver are undoubtedly the most renowned precious metals, they aren't the only options for potential investors. Some others include platinum, a rare white metal commonly used in jewelry. Its value often fluctuates more dramatically than gold. The other is palladium, a silvery white metal similar to platinum. Its price trends often mirror that of platinum due to their similarities. The third option is rhodium, another silvery white metal that's notably rare and frequently used in catalytic converters. However, it's not a regular choice for most investors due to its extreme price fluctuations. While gold and silver are historically known for maintaining their value, they're only a part of the broader investment landscape. As with all assets, assessing their advantages against potential risk is crucial. Asset number 6, collectibles. For centuries, people have been drawn to collecting items, not just for personal satisfaction, but also as a form of investment. Lately, this trend has gained popularity because most people are looking for alternatives to regular investments. Instead of relying solely on mainstream investments, some are turning to tangible assets with values that can remain resilient or grow regardless of general economic trends. The collectibles market offers a range of choices for enthusiasts and investors alike. Here, art stands out as a favored category, admired for its aesthetic appeal and potential to increase in value over time. In addition to their beauty and performance, classic cars serve as tangible relics from the past. While sports memorabilia transports enthusiasts back to iconic historical moments and connects them to legendary figures, these items, with their rich histories and emotional ties, can fetch impressive prices. Antiques, with their unique blend of history and craftsmanship, are highly sought after for their rarity. On the other hand, wines offer a dual opportunity for appreciation, not only for their taste but also as investments that mature over time. Additionally, comic books, representing some of pop culture's most influential stories and characters, have carved out a niche as valuable collectibles. Although investing in collectibles sounds appealing and glamorous, it is essential to approach it cautiously, as it comes with its own set of challenges. Unlike mainstream investments, collectibles operate within more specialized markets. This means that while one might own a valuable item, finding a buyer when needed might be challenging. Therefore, as with any investment, understanding the market, being patient, and conducting thorough research is critical to navigating the unique challenges of the collectibles world. Asset number 5, foreign currencies. Economists and market experts have long considered foreign currencies as a safety net against a potential dollar collapse. Why is that? All fiat currencies, including the dollar, carry an inherent risk of devaluation or collapse. To counter this risk, most investors often diversify their holdings with foreign currencies that are perceived to be more stable and resilient. Some popular choices include the Chinese yuan, Japanese yen, European euro, and the Norwegian krone. Holding these currencies not only strategically strengthens one's financial stability during a dollar downturn, but can also serve as a means to rebuild wealth in the aftermath of such an event. However, it's essential to understand that even these foreign currencies have challenges. They can all be influenced by various factors within their respective countries. So, while they provide some protection, they are not an absolute shield against economic instability. Bear this in mind. There's no guaranteed haven in the world of investments. No currency, be it domestic or international, is sure to maintain its value or remain stable indefinitely. Therefore, you'll also have to adopt a well-rounded strategy, which includes diversification among various asset classes and a continuous assessment of the investment landscape. Asset number 4, Bitcoin and other cryptocurrencies. In times of economic uncertainty, the appeal of Bitcoin and other cryptocurrencies often increases. A primary reason for their popularity is their independence from traditional banking and financial systems. Since cryptocurrencies aren't tied to banks or similar institutions, they present an appealing option for diversifying investment portfolios. Additionally, most investors gravitate towards these digital currencies based on the assumption that they might thrive if the US dollar weakens or collapses. Then again, forecasting the exact impact of a depreciating dollar on the value of Bitcoin can be challenging, if not impossible. While holding cryptocurrencies could be beneficial if the dollar weakens, its value is far from certain. Even renowned billionaire investor Warren Buffett has voiced his concerns regarding the volatile nature of these assets, noting that they are subject to unpredictable fluctuations in price. Furthermore, there's no guarantee of earning a profit. Therefore, it's wise to only invest in cryptocurrencies if you're prepared to lose. Asset number 3, foreign stocks and mutual funds. Most investors often invest in foreign stocks and mutual funds' valuable assets to safeguard their portfolios against a declining US dollar. By diversifying in this manner, they benefit from the appreciation of these assets and profit from favorable currency valuation shifts. An alternative to this approach involves investing in large American corporations with significant international sales. This offers protection since these companies stand to gain from positive currency fluctuations abroad. Luckily, there are several ways in which you can tap into international equities. A straightforward method is to invest in a fund that directly purchases foreign stocks. Closed-end funds, in particular, offer investors a convenient solution. The options include developed and emerging markets, growth and value stocks, and dividend-paying stocks. There are 2 ways to do this for those aiming to buy shares of foreign firms directly. You can purchase actual shares of the foreign entity or opt for American Depositary Receipts, also known as ADRs. Some major overseas companies offer ADRs, which are traded on the US stock market. This setup facilitates easy access for American investors to foreign stocks without navigating cross-border transactions. While ADRs are denominated and traded in US dollars, their value remains tied to the native currency of the underlying stock. This means that if the US dollar weakens, the value of ADRs can increase for investors. Another approach is to directly purchase shares of a foreign company from its native stock exchange. Let's say you buy 100 shares of company XYZ on the Tokyo Stock Exchange at 5,000 yen each. If the normal exchange rate is 100 yen to the dollar, this investment would cost $5,000. Now, imagine a scenario where over a year the dollar depreciates and the exchange rate becomes 80 yen to the dollar. If the share price remains unchanged, the investment's dollar value will rise to $6,250. This represents a 25% gain purely from shifts in the currency exchange rate. Asset number 2, real estate. One of the primary motivations behind investing in real estate is its potential to retain or appreciate value over time. Beyond this, there's a strategic angle to consider. Real estate often holds its value even during economic downturns. This means that when the dollar's purchasing power diminishes, real estate prices tend to remain more stable in comparison, making them an ideal money-generating asset in uncertain economic times. Most real estate investors diversify their portfolios by investing domestically and in properties abroad. This global approach provides diverse investment opportunities and a potential income stream. Moreover, modern platforms like Airbnb have made it easier for property owners to lease their spaces to travelers, offering a return on the investment through short-term rentals. While real estate can offer strong protection in the event of a dollar's collapse, it's worth noting that it isn't a casual investment. It requires dedication and a deep understanding of the market. And even if you don't need an official license to invest, excelling in this field often requires a significant time commitment, similar to a full-time job for many. Lastly, as a potential investor, it's essential to understand the illiquid nature of real estate. Unlike stocks or bonds that can be quickly sold, converting property assets into cash can take time. This means that if you suddenly need funds, your money locked in the property may not be immediately available. So, while real estate offers many benefits as an investment, it might not be the right choice for those needing quick access to their capital. Asset number 1, land. Land is a limited resource and holds intrinsic value, making it an attractive choice for those concerned about the dollar's potential instability. As the population continues to rise, the demand for land, whether for housing, recreation, or other purposes, will likely remain steady or even increase. Land differs significantly from typical investments you might find in traditional financial markets. This characteristic protects it from market volatility, making it a more stable investment option. While stocks or bonds can see their value fluctuate based on many global factors, land's value is generally more stable and predictable. However, there's a flip side to this. Investing in land, especially prime parcels in sought-after locations, often has a hefty price tag. It might require a more substantial initial amount compared to other assets. So, before diving into this investment, it's crucial to weigh the benefits against the initial investment required, considering your long-term financial goals and strategies. Thank you so much for watching. Until next time, have a great day.